Hey everybody, welcome to Trading Capital's exclusive analysis. In today's video, we're going to be discussing the dollar, the interest rate market, and what you need to know for potentially finding a good long trade setup over the next weekly time frame. So tomorrow is Friday. It's going to be very crucial to see how the markets close. Overall, on the daily chart, the dollar has been in a significant uptrend. If you look at the RSI on the Dixie chart, which I will actually just pull up here, you can see it's coming up into that overbought territory. I'm just going to move this to the top of my chart. Clearly see the dollar is getting slightly overbought, but it doesn't mean it can't continue to trend higher. Now, what I'm looking at is really a weekly chart pattern. First off, I want to say the weekly chart, the dollar has had a confirmed technical breakout on the weekly chart. And one thing I want you to pay attention to is that this potential pattern on the dollar does have a potential move all the way up to 107.99, maybe even 108. It would come along with this pivot high here on the dollar, right before you had this impulse weekly breakdown candle in the DXY chart. Now, when you have 1, 2, 3, 4, 5, 6, 7, 8 weeks of consecutive downside, the dollar, when it starts to rally, it has these parabolic moves, but 8 weeks of consecutive upside in really any stock will likely see a pullback. I say likely because it's more probable that the dollar is going to trade sideways in the coming sessions and maybe even pull back to this 103.30 and change level. That would be an extremely healthy pullback in the dollar, and it means that it would likely mean it could even push to this 107.94 eventually. Now, overall, if the dollar is trending higher, it does put pressure on the overall markets, being the fact that the S&P 500 has roughly about 40% of its earnings from emerging markets. So if the dollar is now in this critical tightening range above the 104 level, it does apply an immense amount of pressure to the overall indices. And frankly, that's what we've seen over the recent sessions. Really, when you factor in the dollar challenging that 104 area on these last couple weeks, that's really when you've seen the S&P 500 start to sell off in the coming sessions with this nasty 4-day pullback, gap down, gap down, gap down. However, the indices responded quite well today, so that's a short-term positive. Now, I'm expecting the dollar to cool off. Why is that? Well, I think we're going to get some consolidation, which inevitably opens up the door for a potential bounce. We've seen the likes of many emerging market stocks, like some of the China names, getting absolutely slaughtered. Alibaba, BIDU, PDD had that short report against it today that had a big gap down and then a big rally off of the lows. So an impressive move in some of these individual names. But the real indice that I'm watching key is the QQQ. Why? Because we've had such harsh selling pressure in a couple names, specifically Apple. When you see Apple getting slammed in basically 2 days, down 3.5% yesterday, down another 2.92, was down about 3.5% at the lows. So when you see Apple, the largest company in the world, fall 7% in 2 days, and realistically speaking, the S&P has only fallen a handful of percentage points, that's showing to me relative strength, which makes me think that the actual markets can see somewhat of a bounce. And again, let me be clear. If this Dixie starts to soften up and consolidate lower, the indices should see a bounce lower. One thing that I was paying attention to today was gold. Despite the dollar being higher, gold actually eked out a small gain. Now, let me be clear, gold has actually triggered a little bit of a head and shoulders pattern, which leads me to think that the dollar price action will trend higher over the coming sessions. However, I do think that the next week for the Dixie is going to be a little bit of a consolidation inside day, which is why I'm starting to accumulate some longs in some key names. So specifically some tech names, NASDAQ, because they have been the sector that have been thrown out with the bathwater. Energy is looking interesting as well, although it is looking a little bit more extended in my opinion. But needless to say, when you look at the yield market as well, yields are clearly in a long-term technical uptrend. Starting with the US 2-year yield, there's a lot of wiki price action, a lot of chop in this area. You broke this key trend line once, it was saved and rallied, you're putting in a lower high, but it doesn't mean you can't start to trend higher on the 2-year yield. I actually think the 2-year yield is going to pull back and test this lower 4.7% boundary range again, and that would be okay. It doesn't mean yields are broken. The longer term trend is still in a weekly uptrend, but I do think that yields have had a pretty parabolic move, even specifically, say, the 10-year yield. You know, if we pull up the 10-year yield on the weekly chart, you're kind of into this double top scenario, which leads me to think that we're going to see some lower or sideways consolidation, which may give room for tech to run a little bit more. Let me be clear. Do I think yields can go a little bit higher from here? I absolutely do, but I do think that we need some more sideways chop or even lower price action. Where I have yields pricing in for a retrace, I think the yield market is going to retrace to one of two levels. You have two massive support levels. Target 1, target 2. If the 10-year and bonds start to cool off and retrace down here, it's going to propel the QQQ market. Let me just look at this QQQ on the daily chart. Many people are looking at this inverse head and shoulders. Let me be clear. No inverse head and shoulders on the QQ, or sorry, no head and shoulders pattern on the QQQ can have a move of a downsloping neckline. You have to have an upsloping neckline on an inverse head and shoulders. And since the yield market has been substantially strong as of late, if we get any sort of cooling down, I think the tech market is going to take that and grab hold. You look at some of the bellwether names, NVIDIA. If we actually throw up the moving average, let me just type in I should have had this ready on my chart, but if you just type in a simple moving average on NVIDIA, you know, you tag the 50 moving average to a T here. That's a beautiful, healthy sign. Let me just pull up the other simple moving average here. All right, let's change this around to the 50-day because I want to show you how important that is. The length, 50-day. Whenever the market leader holds the 50-day moving average, which NVIDIA just did, it bounced and rallied substantially off the lows. That is a positive sign for market participants. It likely means that market participants will at least push for this gap fill, maybe even higher on NVIDIA. And it's going to be interesting to see how the overall market responds to the incoming data next week. So tomorrow is VIX Crush Friday. What do I mean by that? Well, typically on a Friday, you see the VIX lower. So full disclosure, I am shorting the VIX personally via the SVIX. But overall, most of the time, and it's a very high probability that you see the VIX get crushed lower on a Friday. And after the massive reversal candle today on the VIX, not only is this a daily hammer candle, this is a very bearish signal. Not only did the VIX start out extremely positive, up over 6%, it closed negative on the session, down 0.28%. And that closed negative despite the indices, the S&P still closing down 0.31%, despite the QQQ closing down 0.72%, despite the IWM closing down 0.97%. So if the VIX can't even catch a bid when all of the major indices are down, what do you think it's going to do on Friday when it historically has a tendency to see much lower price action? So be ready for some potential long trades. I am fully positioned. I am nibbling on some longs. My favorite all-time setup right now is this Tesla chart. You know, if we simply just remove all of these candlesticks over here, you can see Tesla's below the 50. But what I'm seeing and observing on Tesla is this beautiful chart pattern. Left shoulder, head, right shoulder forming. This is an inside bar bullish consolidation. You haven't been breaking this zone. And what I want to show you here is Tesla's coiling, consolidating. If Tesla can break this neckline here, you have a big move to the upside that is just awaiting on the horizon. Tesla has had price cuts. Tesla has had high yields. In the past sessions, Tesla has had a weak market over the last few sessions, and look where it's gone. It's basically gone nowhere in the last few trading sessions as the NASDAQ has sold off, as the S&P 500 has sold off. Tesla is still just really coiling in a range. So any bit of strength, you can expect Tesla to catch a big move. So full disclosure, I am long Tesla at this point with a tight stop loss below this green bar low. If you lose this green bar low on a daily basis, then it is bearish for Tesla. But as long as you hold that, Tesla is looking poised to continue to move higher. And also, let me be clear, there is another larger inverse head and shoulders, left shoulder, head, right shoulder, even a double right shoulder forming that has triggered on the daily chart. Take a look at this. You know, you can draw it like that, you can draw it like that. For instance, if you want to be more conservative, and even if you use this larger weekly inverse head and shoulders, you know, take a look at where Tesla should go on the charts. We're talking about a 340 upside target. And that would not surprise me. You know, Tesla does have an all-time weekly gap around this 408 level, so don't be surprised if we can actually challenge this 342 level. And I firmly think the QQQ Nasdaq has a potential another leg up. Look at this potential inverse head and shoulders that is also forming on the QQQ as well. That would align with the overall chart pattern of Tesla. And once again, I stress it, when you see Apple down over 7% in 2 days and the S&P really barely fell today, you know, that's a little bit of a relative strength basis, because how much more can the largest company in the world fall before you get somewhat of a technical snapback? You already saw it today bouncing significantly off the lows. We day traded this at the low twice for a substantial gain on our live YouTube channel, so feel free to check that out. But if you're wanting some more insights into our alerts, definitely look at our website at tradingcapital.ca, where we issue daily analysis, live intraday alerts, stop loss levels, entry levels, the whole 9 yards. And be ready, because the next phase in the market is going to be very, very powerful. And a lot of people don't think that the markets can continue to rally despite interest rates being this high. The real thing we need to pay attention to is obviously bonds. Typically, bond markets only catch a bid once it starts to price in that recession. Now, I am watching this inverse head and shoulders in the TLT, which is the 20-year yield market. Full disclosure, I did pick up some UBT, so that is a levered play in the yield market of the 20-year yield. And again, it's at some good technical support. If this does basically break out of this inverse head and shoulders, that would show a great degree of softening in the yields. I think the initial softening in the yield market will propel bonds, and it will also propel stocks. But then once you break this neckline and start trading higher and get above, I think, the 50-day, that's when maybe market participants might start pricing in that recession that should be coming in the near term. So I think that indices and stocks can actually rally while bonds rally at the same time. But once bonds hit this key level up here around this 23 on the UBT, or let's say this TLT, you know, if we had to draw a trend line down here on TLT, I think once the TLT really fulfills this upside measure move or hits this next resistance, I think that's when stocks will start to see some downward pressure. But as of now, the market structure remains technically intact. I do like Pfizer as a potential long as well. It's getting completely oversold, but needless to say, Pfizer is hitting this beautiful, beautiful downsloping wedge pattern. Downsloping wedge patterns are notorious for basically breaking out to the upside. This is getting in a very, very tight apex range, and I do expect Pfizer to make a move to the high side at this point in time very, very soon. One other stock or one other currency pair that I want to pay attention to, which is why I think the DXY is actually going to see some near-term resistance. Not only are you into this pivot, into this multi-pivot zones, but if you look at the USD Euro, so if we compare the US dollar to the euro, take a look at this beautiful symmetrical channel. Major pivots, major pivots, major pivot, major pivot, major pivot. Look what you're into right now. So that is a massive, massive level. Could the dollar continue to break through this level and go higher? It can, but you're into this massive pivot. You're into this massive pivot. So right now, I'm at the point where you have to start accumulating on the long side. And what's interesting is you're also seeing some strength in Bitcoin. BTC USD, most people are looking at this as a bearish breakdown, considering you had this pop, this drop, you know, you have triggered this potential break of this key area. But needless to say, although you've triggered this break of this neckline, I think Bitcoin has a chance to make a pop all the way up to about 29,000 in the near term. What I'm watching, I already formed this in the live stream this morning. I said Bitcoin could likely trade to the top end of the range. This is bearish consolidation. If you get a daily close outside of this bearish consolidation, expect the next move to really challenge these pivots. You get a daily close above this 26.7 level, then you're going up to the high side of the chart. And I do think that Bitcoin is luring people in on the daily chart because this looks to be potential bearish consolidation. Mind you, my recommendation, nothing's financial advice, but if I were to play Bitcoin on the long side, I'm looking at some of the miners. I like to play these intraday because they have a lot of alpha. You look at MARA, I traded Coinbase today, which had a nice move to the high side. But some of these stocks, I mean, if you get a technical breakout outside of Coinbase, you know, from this downsloping, let me just redraw that. If if you get a technical breakout on the daily chart, especially a weekly close above this key trend line tomorrow, that is very, very bullish for Coinbase, and it does mean that maybe Bitcoin could actually see some higher price action. And again, Bitcoin likely is front running some softening that is set to occur in the DXY, the US dollar. So just be cautious. I do think that the dollar is extended on the weekly time frame, and I do think that we're going to see some sideways to lower price action. But let me be clear, the dollar has a parabolic move that it tends to do, and there is still a bullish pattern at play on the daily chart where you have this inverse head and shoulders that has broke out. Typically you do get a retrace. If you've missed the dollar trade, a retrace back to this neckline would likely be a good entry spot. And if we got a retrace back to that neckline, that's where I would look to be piling on some of the shorts in the market. On that note, please give this video a big like down below. Definitely check out our website at tradingcapital.ca.